Yesterday, Nasdaq down 4%, S&P down 2.7%. Money out of stocks, into bonds. Everybody seems nervous about the growth story. Is that it? Are we done with that worry? That feels like a brave question to even ask.
No, I definitely don't think we're done with that worry. I think there's two different time spans here. One is, I am surprised how tepid the bounce has been so far. I thought there might be a little bit more of a turnaround Tuesday narrative in the short term, and we get a bit more respite. But this is very much a bounce of the deceased feline variety, and it's not really inspiring.
It's looking increasingly dead because, the Nasdaq futures are now down.
Oh, right, OK, so it's turning even as we speak. Yeah. So I think, actually, the price action is very worrying in the short term. So it looks like we've even got some more short-term pain. In terms of the medium-term picture, no, there's a paradigm shift happening. There's 15 years of excess valuation in US stocks, which is going to come out over the next couple of years. And so this is a theme that's going to last all year. It's not going to go in a straight line, so we're going to get a proper bounce at some point. But unfortunately, it's not looking like it's going to be one very imminently.
When it comes to the short-term drop, we're at, I think, a 9.5% correction. How low can it go? Is this just something that when we hit that 10%, that's when you see the dip buyers come back in?
I mean, some of my colleagues overnight have kind of suggested that is these arbitrary numbers of 10% seems like enough to kind of come to the market, 30% in Bitcoin. Sure, fine. I think that's what people are trying. But I've said the price action's so negative that I don't think that's where the real levels are. In terms of how much this is going to go, I think in this paradigm shift of disruption of markets, people are going to turn to focus on value. And that means that people are going to look at where stock markets in particular have been valued against their long-term historicals. And there are many stock markets around the world that are still relatively cheap. They are not expensive. And the US market is still very, very expensive. Sure, not nearly as expensive as it was 2 months ago, but there's still a lot of excess valuation to come out of the market. So I think that, no, overall it doesn't stop, and US stock market can go a lot lower. And like we saw yesterday, we're going to get brief moments of panic where it's going to overshoot, but it's not overshot yesterday in the long-term story.
Where is the pain?
It's a good question. I mean, clearly tech stocks is where it really is.
Where is the pain in terms of investors? Who is hurting?
Which group?
Yeah, because it usually ripples out from there. So who's got hit first? Where does it go next?
Yeah, so surprisingly, it does. From my anecdotal conversations and a small group so far, it seems like hedge funds are surviving this, a position for this. They're quicker to play the end of US exceptionalism story. They're quicker to kind of pivot on their narrative. I think retail are really suffering. And you're seeing that both by the names that are getting hurt in US tech stocks, and you're seeing that in crypto sector. So and I think that's why also you're not seeing the squeeze in, like, for FX, for example, which is much more a hedge fund game. So like yesterday was an incredible day in tech stocks and crypto, and yet the spillover to other assets. I mean, yeah, sure, we saw a haven bit into bonds, but FX was barely rippled on it, which shows that this is not institutional money that's seeing the real suffering. It is much more about retail.
So yes, the contrast between Tesla down 15% and others in the Mag 7 down 3% or so, that's important, is it? Because Tesla was down with things like Coinbase, MicroStrategy and Robinhood.
Yeah, I think absolutely. I think you need to keep on targeting those meme stocks. Probably still have more to come out because that sector are getting increasingly desperate. You look at these kind of Reddit boards of the retail sector, and it's quite interesting to get a quick sentiment, judge, and they are certainly panicking. This market's been going buy the dip, and they're suddenly going, I've no more money to buy the dips.